any of your questions that you have down below. Jump in the comments. Happy to answer anything today. So what happened today? Bank of Canada came out and announced another 0.25% increase now. So the overnight lending rate, or sorry, rather what really matters is the bank prime will now go from 6.45 to 6.7% in Canada. So that was an increase today. But the silver lining through today's, I guess, challenging environment was that we are not going to see any more rate hikes for a while. It's going to be a bit of a pause. We don't know how long. Could be 6 months, could be 8 months, could be a year. Remember that the Bank of Canada previously said we wouldn't see rates get to where they are now. And they said even if they did, once they started to increase them, oh, by 2023, they'll be back down. 2024 now they're talking about. So that is definitely something that was expected, I suppose, now that we've adjusted our expectations, but unexpected in the beginning. So definitely, a little bit of a surprise for some of the people out there who thought that the rate hikes were done. Nope, got another one, so enjoy. There may be still further hikes this year. On one hand, I'm hopeful that there aren't, but if there aren't, that means that the economy is breaking and that people are getting laid off, which is what we're seeing. The stock market's been rallying the last, pretty much since the start of this year, the last couple of weeks, since the first week of January, went through a big rally. And I'm short the market again. I still have a fair bit on the sidelines, but I started shorting the market. And my options account, it's a smaller account, but I'm 3-to-1 short. So that's where my money is at. You guys do what you guys are going to do. This is not financial advice. I would say that it's smart as we go into the next leg down, which I think we're still going to test the lows of last year. The volatility index didn't spike enough for me to signal that we had hit a bottom. So I don't think we've bottomed yet, but we're in a bit of a rally right now. Still buying now, you're buying at a good discount. Like a lot of companies are still 30-40% off, but I think there's more pain to come. Start dollar cost averaging. So if you're in the stock world, start dollar cost averaging. In real estate, same thing. I'm going to continue to do business. Despite the fact that, in Ontario, we've seen a huge rip down in real estate prices. And I think we're towards the tail end of that. I think there's maybe another 5% drop in real estate, but more likely than not, we've kind of hit the bottom. And in fact, in the last 2 weeks, this might be, not related to pricing, but just simply to a factor of supply and demand, but there's been multiple offers again on properties and there's starting to be a bit more interest. So I don't know if that's some pent up demand that was waiting on the sidelines and is finally hungry enough to go in. I don't know what it is, but we're seeing, when I'm talking to agents, talking to people on the ground, a little bit of a jump in interest. So things are selling quicker. So if you were thinking of dumping a property that's cash flow negative, this might be an opportunity to do that before, potentially another little bit of a lull in the market. And I think that's more likely than not, if you're going to be betting money, we're going to see a flat market in the next few months in Ontario. Now in Florida and some of the states in the US, we've seen a lot of cash buyers in those markets that the rates haven't necessarily translated into drops in prices at the same magnitude. So houses that maybe would have sold for 500 here are now selling for like 400, 425. We haven't seen a full pullback. And so that takes time. Layoffs, savings depletion, maximizing people's available credit, all of that takes time. And so I think we'll see the bottom in real estate into next year. As the Fed U-turns, some point after that, as rates start coming down, we should see a relief. And within a few months, we'll start seeing, the price will start coming up, but it takes time for the appraisers, the realtors, for everyone to be able to use the comparable sale. It takes time. And I've explained that multiple times on the channel, but history and data shows that real estate is slow. And even once real estate starts picking up, we can't use those comparable sales for like 3 months out. So once real estate picks up, I'll be talking about on the channel like I'm talking about right now. There's a little bit of a blip of additional activity right now. Yeah, I'm seeing in Florida and in Ontario specifically. So is that a continued trend? I think the rate hike today might have surprised some people who expected that, rates were done hiking. Remember, prime at 6.7% at the bank means that if you have a HELOC or a home equity line of credit at prime plus a half or prime plus 1, you could be paying 7.7% interest. That's substantial. And that's not sustainable for the current cap rates. So cap rates have to fall a little further, or more likely than not, they'll break the market and we'll be in a situation where, where we're going to have a situation where the rates fall again. I think that's more likely than not, because again, the Bank of Canada is running a huge deficit right now, huge deficit. Most people can't sustain the level of personal debt that they have at these new rates. And so the economy can't support it. Real estate can't support sustained levels at these rates. So I think that long term, that's what we'll see, is a flattening. If anything, I don't think we'll see the big rip up until rates do come down. So I think that there will be a compression and a forcing of rates down. We need to see some action on the inflation piece. And how do you tackle inflation? Well, the way they want to tackle inflation is by destroying demand. And so that's the big thing, is just crushing people's bank accounts so they can't afford to spend. Therefore, companies are forced to lower price. So it's as simple as that. Grinder says, hi Mike, hopefully you're doing well. Thanks for hosting. Luckily you're not in Canada where it's snowing a lot. No, today was 30 degrees Celsius. Beautiful day today. So yeah, I'm thankful to be here. Thankful to be where it's warm. Of course I miss my house at home, and I miss my family at home, and I have people texting me at home I'd like to visit with them. So that part's difficult. I keep encouraging everyone just come down and visit in Florida. Let's go to Disney together. That's a fun thing to do with family. So we might be doing that in February, going to Disneyland. Or Disney World, I guess. So I'm excited for that. And yeah. Shaylin says, hey Mike, how are you enjoying Florida? It's beautiful. We've been enjoying it. Less so than last year, only because I've been really focused on this, renovation flip project that we started off when we got here. And it's been very hands-on. And so that's been something that's been consuming a lot of my time. Whereas and also I have like 3 hyper needy young kids. And so that adds an additional layer of stress. It would be amazing if my in-laws were closer by to help out, or if I had a nanny or something. That would be, amazing. But yeah, I don't know what this is all about. Okay. Sorry, someone was just like spamming the channel there for a sec. Yeah, so overall enjoying it, but a bit of stress dealing with, developing new trade relationships with contractors, and yeah, it's been fun, making some money, doing a lot of different stuff down here, looking at a lot of deals. I'm trying to become an expert on like 6 different, markets and understand those markets. That takes a lot of time, but primarily it's been the fact that we all got sick as well. And I'm still kind of recovering from it. Yeah, the 3 kids being sick, they're still sick. That sucks. So being sick in a foreign country without, having all your stuff, all your support, and living through, chaos is, or in a hotel room again, is not ideal. So that's been the challenging part. But once everyone's healthy again, I know it's going to be a lot better. So we've been just surviving through these times. Tristan says, what do you think of the Bitcoin run? Are you staying away? So I still have a small holding. I dumped most of my holdings for tax loss harvesting last year. And I dumped around the price it's at now, actually. So I could re-enter, I suppose, and be, unaffected largely. But I don't think we're done with the pain that is ahead. So my take on it is that the crypto asset classes and more the growth speculative type asset classes aren't done the pain. And so I think we're going to see another round of pain. At that point, I'll be probably re-entering my position. But yeah, I do have a couple of Bitcoin that I'm still holding that is just, forever. I'll probably hold that until I see Bitcoin at like 500,000 a token. But I don't look at that. That money's just there and I don't look at it. But the stuff that I was trading, that was, the majority of my holding, I did liquidate that for tax loss harvesting last year. So, yeah. Yuri says, what are your thoughts on starting a contracting business? There's a great video by Kevin on Meet Kevin's channel where he talked about the construction company he tried to start. And he explains, one of the videos he does explains why, it's like a few years old now, it's gotta be 3-4 years old now, but it says it more eloquently than I can, but that basically it costs like $9 to change a light bulb, and he explains why. He talks about the overhead expenses, he talks about how to do it right, because again, most contractors don't do it right, and they don't stand by their word, they don't stand by the quality of what they do. So to do a business to run a contracting business where you do a really high quality of work, there's a lot of callbacks, and those callbacks are expensive. So then you have to price more expensively than all the competitors to deliver that quality. And if you can show your customer that you deliver on that quality, they may pay you a premium. But it's difficult, I think, in this recession, in this environment right now, where we're going to have some labor availability. Again, great for flipping, great for real estate investing, because we like to see that, right? We like to see that we have those opportunities to get labor at a cheap cost. So I don't know. On one hand, I think that we're going into a bit of a recession, so starting that business is not ideal timing. The other thing is just like, it's a difficult business. There's a lot of permits, a lot of oversight, a lot of compliance, a lot of safety stuff, a lot of overhead. A lot of things come up that you don't expect. That always happens. Like you open up a wall and you're like, oh, metal studs. Can't drive all this now because it can't hold the tiles, so now you gotta reframe it all. As an example, it's something we're dealing with right now. It's like, oh, didn't expect to spend $500 extra on this or $500 extra on that. And that always happens in construction. So it's good just to have like a large contingency budget. Someone who's optimistic like me, I'm a deal finder, I'm an optimist. I like to look at the positive. It's hard, and it was really hard when I had effectively a construction company in Canada, and we had like 20, 30 contractors working for us. I was forever walking behind them and fighting. It's like, hey, this is not quality. And they're like, it's good enough. And so you're battling between the investor or the customer and the contractor, and you're basically the middleman as the GC owning the construction company. And it's a horrible job. I think it's a horrible job. There are certain people out there who are good at that conflict resolution, who enjoy, battling with the contractors on price and battling with them when they don't finish the work and getting them to show up and keeping them, keeping the morale up on the sites. If you're that kind of person, you enjoy that kind of job, that's what it is. It's a job. It can be a good paying job, but very difficult to scale. Most of the large construction companies that you see out there, they have scaled through corruption, like government contracts that are, again, paying double or triple market price. And then again, they are not efficient either because 2 guys are sitting around while 3 guys are working. In general, construction is a very difficult business, and there's a reason why the big dogs charge what they charge. And it's because it's hard there's a lot of miscellaneous costs. And so that's, I don't know, at scale, I would say it's a difficult business to run. People do it, they make money at it. It's just not one that I'm interested in being involved in. A lot of people, a lot of qualitative. Heard a lot of guys failed building one, including me, Kevin. So there you go. Yep. Check those videos out, Yuri. It's definitely difficult. I would say that, I wouldn't recommend it as a business. If you're going to do anything, you're going to get into a property management business or a construction business. Ideally, what you would do is just refer people, to other contractors and have them sign contracts with that contractor. So when the inevitable fight happens, because it always happens, contractors don't know how to price things well. When they price it wrong and there's conflict, they don't finish the work properly, or they want more money to do it. That is like 8 out of 10 times, unless you're dealing with the most expensive guys. Like I'll give you an example. There's like 5 contractors come in to quote a basement. One comes back 150 grand, one comes back 100 grand, one comes back 40 grand, it's like 60 grand. If you hired all out laborers yourself, you could do it for like 50 grand, let's say. You go with the 150 grand guy, it'll be done well, like HGTV, you'll get keys at the end, it's fun, it's interactive, you get to pick up your cabinets and it's great and, awesome. No stress or low stress. If you go with the $40,000 guy, you're battling the whole time. And then they get halfway through the job and they don't finish or they cut corners. And so like, there's kind of the in-between of that, right? And you got to try to, I don't want to say you get what you pay for, because you can definitely, that's a limiting belief and I hate it. In real estate, you don't get what you pay for. You can definitely buy a great house at a big discount. You can definitely find a contractor who's just as good as a $50 an hour contractor for 25 bucks an hour. I've done it tons. So you get what you pay for is not true. That's a crappy saying for people who don't know how to hunt for any deal or know how to negotiate. There is grading variance for everything. There are really shitty $100 an hour contractors and really great $25 an hour contractors. And I've hired contractors at 100 bucks an hour. Some of them are literally worse than the $25 an hour guys. They do worse work. You get affordability, reliability, and quality. Those are the 3 variables. And they say you can never have all 3. So if they're affordable, then they're either not reliable or they don't do good work and stand by their work. You have to choose 2 out of 3. So yeah, that's what I gotta say about that. It's the hardest part of the business, I gotta say, for me. Like finding deals, not that hard. Selling deals, not that hard. Financing the hardest part to me is the people in the construction business. They're a different breed. And I don't mean that in an insulting way. It's just a different breed of professional that you're dealing with, and unprofessional. A lot of times they resort to violence and immediately, like it's like threatening and swearing, and that's just the nature of the sites in construction. It's just the blue collar segment of the world. I don't know. In the plumbing world, it's like they've been sniffing too much glue. Electrical world, they've been zapped too many times. Your electricians are one of your higher quality trades. I tend to find my electricians are a bit better, but now what, I have some really great contractors too, and so it's a mixed bag, but in my experience of dealing with hundreds of contractors, there's a lot of bad apples, and especially when you're looking in the affordable available range. So someone who's available to start your construction project a month from now, or you're calling around to find a subtrade and they're available, which is what you need, and they're affordable, they meet your budget, and they show up and they start doing the work, their quality is probably not amazing, right? Their quality might be amazing, but then the reliability, like they might be on drugs or be a drunk. Drugs and drunk is very common in the trades, very common. So that's just something you battle with, right? Like there are some, I used to have a really good contractor that would come drunk all the time, and they were still really good. As long as they had no more than 6 beers, they were like pretty good at what they did. They were affordable too. So it's, sometimes you work with people, and you work with their strengths and their weaknesses, and that's how you stay on the budget. So unfortunately, I try to stay on the leaner end doing, my renovations and my flips to a B quality as opposed to an A plus. Like I'm focusing on, I don't do a lot of $2 million houses. So like if you're doing like luxury $2 million houses, you can afford those expensive guys who do really great quality work. But in the lower end, you just need floors laid for $1.50 a square. You just need, walls painted. And so you're gonna find if there's 3 painters, one of them's $8,000, one of them's $3,000. The $8,000 one is a lot nicer, but you can pay $5,000 more to have a better experience working with that painter, like less swearing, less, drama on the site, because drama on the site is common, trades fighting with each other, all that stuff. It's the human element of real estate investing. There's a lot of it. There's a lot of human element in it. Unlike in an office where everyone's professional to an extent. Coming from an office environment and then going onto a construction site, it's a different breed. It's like the construction guys are mostly the dudes in high school who were out in the ditch hitting the joint. I don't want to stereotype, but like a lot of them were like out there hitting the joint and had like C's and D's in class. You're not dealing with like your professional. I'm not trying to be insulting, right? It's just like, I don't know. Anyway. Mike says, what's a good budget to burr a property in Florida remotely, duplex or triplex? Again, it depends on the area. Like every city is different. I would say you can find a decent duplex, concrete block construction for like $250,000. If you want it like nicer with a 2-car garage, you might be like $350,000, $50,000 for renovation maybe. It depends. Depends if it needs a new roof. Depends, like the roofs are 15, 20 grand to start. So a lot of the properties in Florida need roofs because the roof lasts 20 years maximum, unless it's metal in Florida. So that's something to think about. Like even after 10 years, a lot of the roofs are like, you got to do some patchwork to them because the sun is just so hot and beating down on them all the time. And sun does damage to everything. It just eats away at everything. Bum, ba, bum. Why not Airbnb and buy properties in Florida? You definitely, that is definitely a strategy. I think that Airbnb, of any market, I think Airbnb works the best in Florida because Florida has a huge off-peak season in the winter. And then during the summer, everyone goes on summer vacation and they have that whole thing too with the beach. So it's like they're just on all year round. And you've got like your spring training for your baseball teams, you get your golf, like literally all the time. It's great. Whereas in Canada, you got your great summer season for cottage country and Airbnb and all of that. And people travel and do summer break and all that. But then in the winter, it just dies and it's really slow. You don't get that. Like it's actually hotter here in the winter from a demand perspective for Airbnb. So if you do it well and you do it right, a lot of it's location, and I'm still learning, right? I'm not a master by any means. I'm beta testing, but location is when I'm talking to people, I'm hearing what the good people at Airbnb are doing here in Florida. Location seems to be the most important piece. The problem is really good location real estate is really expensive. Like if you want to be right near the beach, that's expensive. Right near, good area of town or whatever, again, expensive. So it's something to think through, I guess, Mike. But I would say that the cap rates are better here, the fundamentals are better here, the pricing is just fantastic in comparison to what you're going to see in a lot of areas of Ontario. So for a number of reasons, I like Florida. Arizona is also great too. I can see myself being in both of those, more freedom-focused red states. Como says, check out Lake Nona, Mike. They're building a vertiport. I don't even know what that is. And they already have driverless rides to the main city. It's about 10 to 15 minutes from the Orlando airport. Lorette Park, Tavistock. That's cool. I heard that Tesla was going to be expanding near Disney as well. So that's interesting. Orlando, what's cool about Central Florida too is that the hurricanes, non-existent, like not really. Because by the time it moves to Central Florida, there's not a whole bunch of devastation. So you don't get the massive flooding. You don't get the massive, damage you get right on the ocean. So again, I like to buy a little bit further in if I can. But yeah, that's cool. I'll check that out. I think Florida's going to get a ton more development, a ton more growth. So it's, again, another just a place I like to park my chips. And over a 10-year period, I think I feel really good about that decision. So it's the same way I felt like London was in 2012 when I was buying my first properties. In 2012, I was like, that was almost 11 years ago now. I was like, London is just, you can buy a house for $250,000. The rent metrics just made sense. I was like, this is extremely undervalued. You're almost getting the land for free. There was a ton of good, growth trends for it having the largest university and the largest college. London just made a lot of sense. And then London's housing price tripled, almost tripled. We'll call it, it's now pulled back. So we'll call it doubled at least. Now with the 30% pullback we've had, I would say the prices have at least doubled. And so that was the right bet. And I feel the same way about Florida now. And so I'm hoping as we get this dip, I'm going to continue to buy the dip. And so I don't know if we're at a bottom yet, but I know that, as things I'm fairly confident that as the rates take hold, the bottom of real estate will form sometime next year. I think towards the end of 2024. But I will continue to buy and to flip and to run my businesses despite that fact. I think that most of the deceleration has already happened. There will be slightly more. We won't see a huge uptick. That's the good news. So I can build systems, I can continue to buy, I can build a portfolio without missing that huge rip up. And that's the important piece is like, this is the time to be dollar cost averaging in with real estate. So buying your deals, fixing them up, refinancing them onto the next one, building your systems, testing your people, learning in a new environment if you want to explore into a new environment. And if you're new to real estate investing, wherever place you choose, practice, reps will make you better. That you can get to a point where you can flip in a down market and still make money. I've done that. I'm flipping, not even just flipping, but buying and burring in a down market and still making money. So that's the expert level. If you can learn how to, and that requires squeezing the deal just right, architecting things in the right way, squeezing the cost side, all of that coming together to maximize profit. So yeah, that's the goal, right? And to enjoy a good life. Really, that's why I created this channel, is like, how do I get people out of their job that they hate and their grind, right? And I think real estate is a relatively lower risk way to do that. Crypto can do that for you too. Growth stocks can do that for you too. But, half of people are gonna lose their shirt. Whereas in real estate, you don't lose your shirt. You just hold and you win. So that's what I like about real estate is if you follow the right strategies and you buy cash flow strong properties, you win. Shanak says, I see so many people from Canada going to Florida. Florida as a market seems very lucrative. I'm not done my analysis on it yet, but looking at the wave of real estate going there, I'm getting FOMO. At the end of the day, you're right. There's a huge influx of Canadians and all across the US, people moving from blue states like New York to Florida. There's actually an exodus of people from blue states like California and New York to states like Florida. So that's huge, right? That we're seeing all of that migration of people, and we're going to need infrastructure for that. And so real estate investors can get in early on that before the infrastructure is built. In a recession is one of the best times. Like, we haven't had an opportunity like this since 2009. We're basically in 2009 right now. Real estate didn't bottom until 2011. So I think we're in 2009 right now. If you're just starting to get involved in real estate, this is the perfect time to start getting in. You're a little early, but the perfect time to start developing systems, buying properties. This is like a once in a decade opportunity. And so I'm extremely excited about that. Also on the equities side, I'm extremely excited about some of the growth companies as they bottom this year. I'm not super interested yet. So waiting on that. And I've felt pain too, guys, this year. If you've been holding since last year, you felt the pain with me and ridden it down. And it might feel painful now. It might feel like, it's bad, but it's actually really good because it allows us to well, first off, test our strategies and our theories and make sure that we're diversified and make sure that we've thought things through. Everyone, the crypto bros who are 100% crypto, I was like, spread it out, put a little bit in everything. Those crypto bros are real quiet right now. Well, maybe not lately. The last 2 weeks, Bitcoin's gone for a run, good 30% run. So they might be loud again, but they're still underwater from where they were last year, right? And so diversity is important. Whatever you do, diversification is super important. Even within real estate, I like to buy properties in different areas. I like to buy properties spread out. That's another reason why, like, as much as I love large multifamily, because again, you can make so much more money. When you do a 30% profit spread on a $5 million deal, then that's $1.5 million. If you do 30% profit spread on one small deal, it's like barely 6 figures, depending how small the deal is. The bigger deals at the same margins make more. The margins are tighter on bigger deals. And so that's where there's maybe a bit more risk, but the downside, again, very small. So the chance of losing a lot of money, very low. But again, spread out. I like properties in multiple places, multiple cities ideally. There is something to be said about having your properties under one roof. I get it, it's more, you get economies of scale, so it's cheaper to run, more efficient, easier, but spreading it out is great. Just from a risk management perspective, I like having multiple different businesses. And so I might have long-term rentals, I might have short-term rentals. I might have properties in one city and properties in another city. I might have a single family strategy. I might have a duplex, triplex strategy. And I like having different types of tenants that I cater to, and your tenants are your customers, right? So, yeah. Bum, bum, bum. For me, and again, I understand, probably someone's gonna raise this up, but like, Mike, you're probably gonna go too heavy into real estate again, which is, yes, I probably will. I wanna get to a point where I've allocated like 90% or 80%, we'll call it 80% of my net worth into real estate in the next 2 years. And that might be, crazy, but for me, it's not. Again, because I can buy at a discount. I'm not buying assets at market value. Even if you're buying assets at market value, I still think that real estate is a good play. In the next 2 years, you're going to dollar cost average, and over 10 years, you're going to win big. So that's just my thesis. But I have a competitive advantage, and so that's why. I don't have a competitive advantage in stock trading. I don't have a competitive advantage in pretty much any other business except for real estate. So I should focus on that, right? Paul says, hi, I just got a mortgage last week to buy my first house. Sorry, it won't be a house hack, but it will have a rental suite, Paul says. Do you think 1 or 2 year fixed or variable rate? I'm thinking 2 year fixed. I have to see the rates that they're offering you. I think it's probably not a terrible idea to do a 1 or 2 year fixed in case rates get any higher. Now, you know what? I think variable is probably the safer way to go. The reason I say that is like over a 5 year period, variable is going to win. So if you zoom out, variable wins. We are at it may get a little bit worse, but they've talked about a pause. So for the next 6 months, we're going to pause. Then they might drop. More likely than not, they're going to drop. But it could be a thing where they raise and then drop and raise and drop and raise and drop and drag this on for a couple of years. I don't know. More than likely, though, if I had to bet money, I would say rates are going to come down. And so variable positions you to be able to ride that wave down. So I would say variable probably will win, but it depends on the rate that they're offering you for the variable. If your variable rate you're being offered is lower than the fixed rate, I would say go variable right now. If it's a lot higher, I would say over a 1 or 2 year period, I would stick with the fixed rate. On my house, I have a HELOC that's at prime. It floats. I also have a fixed portion on my cottage. I have a 2 year fixed, which I locked in last October, I mean 6 months ago. So I have a 1.5 years left on that, and I fixed it at 5% because I just thought, it's safer, and I figure I can always early renew. You can early renew 6 months ahead of time if rates do fall. At that time, I thought 2 years. So that would put us at 2024 September was my forecast for when I thought rates would start to fall in a substantial way. So if that helps you any. Again, at the end of the day, run your numbers on your property. You have a rental suite, so you are basically house hacking. You said you're not house hacking, but then at the same breath, you said it has a rental suite. So having a rental suite that you rent out is house hacking, unless you're just not going to use that rental suite. You're just going to use it personally. But that's the right way to go about it. Good job. Roy says, are heat pumps better than old school radiators or forced air heaters? So Roy, it depends on the house, but most of the time, heat pumps are the most efficient way to heat a space. Again, you can custom heat small areas of space with heat pumps, which are great because you can choose zones depending on how you set your heat pump systems up. But up into, it depends on the temperatures. So up until like -20, most heat pump systems are way more efficient than a forced air gas or electric or any other system for heating. They're the most efficient system. But if you're talking, in a really cold climate where things get like -30 for a bit, they suck. You need a secondary heat source because they stop being able to take the heat out of the air when it's that cold. So most of the time they're more efficient. It's like geothermal. I have 2 geothermal systems in my house at home, and it's really efficient in the cooling, super efficient for cooling. But then in the summer, I find that in the winter for heating, I find that it just not as efficient. It struggles to keep up, again, because it can't get enough heat out of the fluid that it pumps through the ground. And the heat pumps are a lot like that in that they have an outside external unit, but they are trying to, capture some of that heat. And they are very efficient up into a certain temperature, for sure. The most efficient way to heat a space, for sure. Mez says, sorry if you've already answered this, but what are your favorite areas to buy? You said you like Miami, Tampa, but they're pricey. So for me, I like the east side. Honestly, I like the west side better than the east side, but I like the east side better because of its proximity to the Bahamas. And I want to build a triangle between that. And also I think the east is growing faster. So for that reason, I think that there's going to be long-term better appreciation on the east side. However, like from a strictly like which beach do I like better to enjoy? The water's warmer. I just think in general, like your not Naples, but like your Sarasota, down in towards Naples, it's just a little bit nicer there. A lot of retirees, beautiful, Gulf water. However, I think that long-term it might not appreciate as well as like say north of Miami. And I like north of Miami as a spot. So like I'm talking, your Pompano Beach to your West Palm Beach, your Port St. Lucie, Stewart, up all the way into, Vero Beach and Melbourne and up into Tutsville and even Daytona. That whole strip in there I think is going to do a lot better. Specifically, I really like the West Palm Beach area and like slightly north of that. I think that's going to do better. It's growing faster, one of the top 10 fastest growing cities. Tampa is also growing mad fast. And so there's a lot of opportunity in Tampa. It's just cold and colder in Tampa. And so that's a challenge. It does get like 0 at night sometimes. We're close to freezing in some winter days in Florida. Whereas like near Miami, you never get that. It's always nice and warm. So there's just temperature variance differences from a quality of life perspective. I think that boils down into the business. From an Airbnb perspective, I would think that like you'd attract more snowbirds and things to that area specifically. But I like the proximity to the Bahamas. I like how fast it's growing. I like, Miami is expensive. You can still find stuff in Miami though. Like wholesalers are sending me stuff. Realtors are sending me stuff like $400,000 or $500,000 for like duplexes and stuff in Miami. So there's lots of stuff you can buy in Miami, depending on which areas of Miami, outskirts of Miami. But Miami traffic is just deadly. So that's something to also think about if you're going to be spending time there too. Jazz Raj says, can't you only Airbnb a property 180 days out of the year? No, so it depends on the municipality. This is a municipal issue. Some places it's banned entirely. Some places, like in Florida, some cities it's regulated. And so you have to, get a license to do it. And that's pretty much how it is in most of the places. If you avoid HOA, you're good. The HOAs here have strict rules. A lot of them don't allow Airbnb. So I've just avoided HOAs entirely. I don't like people telling me what I can do with my property. So I like to buy freehold properties that have no HOA, free and clear. And I can do what I want on my land. And so that's just been I've been like that always. But yeah, in Florida, there's not a lot of restriction. You can talk to each municipality depending on which city you're looking in, but pretty much all of them allow it. None of them that I know, I can't think of any cities that ban it. None that I'm investing in are banning it. So yeah, I mean, in Toronto and stuff, I just don't think they'll do that in Florida in the same way they did in Vancouver or Toronto, where like, Canada's very socialist. They're like, oh, this person's profiting and it's hurting housing, like ban the profit. Florida's a capitalist place. They want people to survive and thrive and grow in their business and do what is best for them. It's very individualistic, very capitalist, very free. And so I don't see those kinds of limitations. So again, it depends. Some HOAs, if you buy an HOA house in a community with community condo board rules, the HOA might tell you 180 days or something, right? But no, by and large, no. Is there restriction in Ontario? Yes, a lot of restriction. Most cities in Ontario, it's illegal to Airbnb. Like London, they made it illegal. Toronto's like not allowed almost every area around Toronto. Most of the cottage country, they're starting to come up with restrictions. Again, the NIMBYs got together, the not in my backyards. The old farts were like 65, like, I hate Airbnb, it ruins my cottage experience. Families only on this street, like no foreign rental families, no Airbnb. And they lobby the counselors, and the counselors like also a NIMBY. And they're like, yeah, like let's pass something. And then the residents are like, yeah. And it passes, and they block you. I hate that. I see where they're coming from, and I try to empathize and understand where they're coming from, because like, who wants to be next to a bunch of partiers? At the same time, like just banning it is so stupid. There are better ways to tackle it. You can put in a licensing program, maybe. It's a pain in the ass for the landlord, but you could put one in that would prevent a lot of the abuses, where there are absentee or bad managers that don't run their show well. MeZZ says, I look forward to the day I can get out of the rat race 9 to 5 or here. I hear you. I've escaped from the 9 to 5 to the 7 days a week entrepreneur, where I'm always pushing myself, and life's part of my business and my business is part of my life, and it's 7 days a week all the time. What's nice though is that I can just turn it off and go on vacation when I need to. I just don't. I should more. I should go to Disney and enjoy. When I finish this project here, I'm going to go do that and take some time off. But I'm just the kind of person who wants to, push myself to boundaries and unlock new levels. And I look at, business like a game. And so it's something that's fulfilling, but at the same time does bring a level of stress and, bring some cortisol in my body. But some of that is good. Roy says, is Drano safe to use to unclog a sink? Depends. Be careful with harsh chemicals, and be very careful. I've seen sinks melt before with the wrong combination of chemicals. I've seen glue come loose on joints in the ceiling or the floor on the way down, because you pour it in the drain, and then somewhere along down the line in the pipe in the wall, a junction's starting to come, the glue's starting to get old, and that Drano or that stuff you pour down kind of just ruins the last little bit of it, and you start getting a drip or a leak. And so by and large, I don't like those products, but I have used them occasionally. The further part of it was plumbers claim it does damage. Stop people from unclogging sinks. At the same time, though, to the last bit of your point there about plumbers saying that the better way is to unclog with the snake, I've had a plumber shove a snake down my toilet drain, or not toilet drain, sorry, your bathtub drain to get a tenant's hair stuff out, and they jam it down. They got caught on the pipe where the union joint comes together, and it dislodged things. And so by snaking it, they cause more damage than the Drano. So sometimes the plumber is snaking it causes damage too. Just in general, try to find tenants who understand that putting a hair catcher over the drain is important. That don't pour grease down your drains. Basics, people. Big Up says, is it true it's a lot more difficult to get investment properties once you've purchased your principal residence? No, yes and no. Like, if you can show some income from your primary residence, it could help offset. But yeah, if you have additional obligations that you're paying for, then, it just is what it is. It's, you're going to have more debt to service. So your debt service ratio isn't going to be as good if all you had was a primary residence and before you didn't. And your primary residence now is a lot more than your rent before. However, if you had an expensive rent before, then your new house costs the same, then your debt service is the same. But where you see issues is like people were like claiming they're living for free at their parents' house, and they buy a house. And they're like, oh, my old financing application had 0 for living expenses, and now I have to show a mortgage on my application. It's harder for me to service that with the same income. And it's like, yes, obviously that's the case. So yes, primary residence does slow you down. In my case, I have a $2 million mortgage on my house. And so, my house is worth like $3 million, but my house back in Canada, and it's, I luckily have a guest house, right? And so I can house hack. I have that option, but it's it does slow me down on applications a little bit. I just have to show a lot more income, and I have to, bring more assets to the table. So luckily I have those, so it's okay. But yeah, if I didn't have the net worth that I have, it would be a struggle, a big struggle to get A-lender financing for sure. So yeah, for sure it does slow you down. Danny says, do you think you'll ever do any personal coaching or mentoring? Danny, I opened up my calendar actually for 5 coaching calls in the last 2 weeks. And it was $8.99 that I charged for the coaching calls. I did a couple discounted ones at $600 for a coaching call with me. And there's some great testimonials on my Instagram. You can go in there and you'll see one of the guys was like literally at my 6-year degree, in 6 years studying in school. And he's like post-secondary. He's like, I learned more on that call with you towards benefiting my finances than that whole 6-year degree. So I can drop bombs really quick and blow a lot of value in a short amount of time. So I do open up my calendar occasionally for calls. I'm trying to do that now. I prefer to do it this way. So I'd prefer to do like, say it's $6.99 for a call or something. I prefer to do like 7 calls or 10 calls and do 1 a month with people, right? And I feel like if we can do that over 10, like say 10 calls is almost a year. So a year is like 7-8 grand. But now I talk with you every month, and it's like you have me as a JV partner on your project, and I can walk you through things. We talk once a month, and we have a call. So that's more what I like to do, because then I get to see the value in them progressing and changing their mindset. And so that's what I like to do, but I do one-off calls, yes, occasionally. But I'm very selective. I don't like to open my calendar up, but I will do it, and I am doing it. So if you are interested and you want to do it, you're watching this, you want to do a coaching call with me, rosehartcapital@gmail.com. Send me an email, and then you can send me an e-transfer. I'll give you the email for the e-transfer. It's not that same. That email I haven't set up to my bank account, but I have another one you can e-transfer it to. I also take crypto. I don't like to do a lot of these, so I'm very selective. Like I don't want this to be a business. I don't want, at this time in my life right now, I don't want to do this like a full-time thing, or like, I don't want to be on the phone like 10 times a week. That would be too much. Like I want to keep it a couple hours a month, ideally. So I take very few people on. And yeah, so to answer your question, I do coaching occasionally. I do mentorship occasionally. I ran a mentorship program where I brought people into my life. I had a lower basement apartment. I brought 4 people in, and I brought 3 more people in over a couple of year period. And I did deals with them. We shared in the profit 50-50, and I coached and mentored them and was with them through those deals and watched them all of them make 6 figures and succeed. So that was a fun, enriching experience. I didn't charge for it really, other than I shared in the profit with them. So that was a very time-consuming process, but I have done a lot of mentorship in the past and different flavors of the programs. It's an extremely profitable business, really high margins, easy to scale. I should probably do a course or something, a bunch of courses. It's just not where I want to be spending my time right now. It's just not a focus, but I understand that it's very profitable to write a book and build a business around that, around education. I've just been doing it for free every week for you guys. And occasionally I will do paid coaching. I don't do free coaching calls anymore. 5 years ago, I was doing them for free. I would go talk to people. They'd like take me out for lunch. Just make $20 for lunch or something. I'd be like, just send me whatever you want. I'll just do it for free. Let's get on the call. And I would help people and coach them. And then it just became draining and it felt like a job. And so I stopped doing that. And then, yeah, it's been a learning experience. Hey, Jordan, how you doing? Young Mike, he said. Eric says, hi, Mike, I miss you. I was shoveling snow. No worries. I hear we're getting like 3-4 feet. I have a security system at my house, and I can see friends are texting me pictures too of all the snow and how crazy it is. So here it's like, it was 30 degrees Celsius today. It was like 80, what does that translate to? Like 88 Fahrenheit or something? Almost 90 Fahrenheit, I think. It was very, very hot here today. And it's going to be cold tomorrow, actually. A cold front's coming in, and it's supposed to be down to a cold front, but like in the 70s Fahrenheit, so like 20 or something, low 20s, which is like nice still. But yeah, I don't miss that. I don't miss the snow. My daughter does. I showed her pictures and she's like, oh, I wish we were at home like building a snowman. So it's, I gotta wrestle with that. My kids would love to be, in the snow sometimes. But I'm glad I'm here. Big Up Penguin says, is it true it's a lot more difficult to get invested property, as we did that question already? Okay, here I am, found it. Last question. Big Up says, where do you see yourself retiring? Somewhere like Florida, or do you plan on moving back to London in the long term? I don't want to be in London long term. I don't even want to be if I had to be in Ontario, it'd be on the lake. Lake Huron, near Grand Bend or something, just beautiful. So for me, that's the place I want to be. I just want to be somewhere that's on water. Tax wise, I need to spend like 91 days a year in the Bahamas to be a Bahamas tax resident and pay no tax. But then as soon as I become a Bahamas tax resident, I can't be in any other country for more than 6 months, which means I have to if I spent just over 3 months in Bahamas, that leaves a little under 9 months to spend between 2 other countries of my choice. So that could be Costa Rica and Canada. I like Canada. Canada's a beautiful country. The summers are amazing in Canada. It's nice and warm. It feels like Florida. In Canada, you're on the beautiful beach, beautiful lake, fresh water. The people are so nice. The systems are amazing. There are a lot of great things about Canada. I'm familiar with Canada. I like the people better in Canada than I like them here in Florida. But I like the economic environment here in Florida better than I do in Ontario and Canada. So the tax environment, the economic environment, it's just not a great place to do business in Ontario. But it's a nice place to live. Vancouver's also very beautiful too. There's some beautiful places in Canada to live. Not 12 months a year, but I'd say 4 or 5 months a year. There's some beautiful places you can stay in Canada. And I love Canada. I will always be Canadian. I feel at home with all these. It's just, for me, it's just the right way. Yuri says, thank you, Mike, for sharing your wisdom. Lots of value. Much appreciated. Have a good night. Thank you so much, guys. Appreciate everyone for tuning in tonight. And as always, if you have any last burning questions, you know how to find me. You can reach out to me on Instagram, Mike Rosehart, on Facebook. And yeah, that's it. That's all that we wrote for tonight's show. And we'll see you next week. We're live every week, 7 to 8 p.m. Eastern Standard Time. I go live for 5 years now. There's 300 hours or 250 episodes of shows. You can go back and me just talking off the cuff, answering questions and doing the live show. So go check those out if you're new to the channel. And as always, the secret to unlocking wealth through you is 3 levers and control your financial future. Spend less, earn more, and maximize returns in the difference. That's it, everyone. All right, guys, we'll see you next week.